Hey, what's up, guys? How's it going? New Capital again here with Christian Larco, Gio Garcia, and
Jimmy Villafuerte.
hell yeah. This is gonna be a really interesting podcast. We're here with a very interesting guest. He works. I cannot say where you work. It's fine. This will be edited. So he has a really interesting position. He's gonna give us his feedback, and he's also a really good investor.
Safe investor.
Safe and good.
That's how you should do it, though.
Yeah.
We're not like that.
Yeah, or not. Take a lot of risks.
Yeah. I mean, at the beginning when I started off, I took a lot of risks too. But
when was that?
that was 2010.
Bro.
So everything I
12
need,
years.
I knew at that time it was the time to take a risk. Because I had to put everything into it. Real estate had dropped 90%.
Yeah.
Where I was buying Victorville, Fontana.
Yeah.
House that was worth $350,000, I was buying for $50,000.
Damn.
Jeez.
Where were you in 2010?
I was playing soccer.
I was still in fucking college.
Yeah, I just barely graduated. Yeah.
Yeah?
Barely graduated.
So, question right there. So, what made you invest? Like looking at everything, all the real estate market plummeting right in front of your eyes. You're just the crazy one that was like, you know what? This sounds like a good idea.
I was lucky. I had a professor in college and university. My second semester in, I think, in university.
Yeah.
I took a accounting 101 class, and he talked about Rich Dad Poor Dad.
Okay.
And he just kind of went around the room and he said, hey, look, I get no royalties from this, but if any of you guys business degree majors are here for actually owning your own business or actually investing, you guys want to read this book.
Okay.
So I took it up on myself and I read it, and then I was like, whoa, this is it. This is the key.
Yeah.
And then I just kept on reading all his other books, because by then he had like 5, 8, 10
Mhm.
books or something. So I read Prophecy and all the other books, and in there you could see how he was timing the market
Oh wow.
and how he was predicting the 08-10 crash.
Yeah.
And so I was like, okay, I was waiting for that to happen. And once it finally did happen, I didn't have much money. I had $15,000 to my name coming right out of college. But
Okay.
I was making, as an analyst right away, I was making like $6,000 a month. So, and I didn't have to pay anything because I was living in my parents' house. So
Yeah.
everything just went to the savings account. So I
Mhm.
put it in the savings account, and then I partnered up, I think, like my second month after working with a cousin of mine, and we went 50-50 on a $50,000 house in Victorville.
Nice.
The $25,000 each, $25,000 for me, and I think I didn't even have the $25,000, so I had to tell him, hey, can you help me finance the difference of the $25,000? And every
That's the way to go.
rent we get, like, you take it all until you get fully paid off for the difference.
Seller finance from the start.
Yeah, well, not even, dude. It wasn't seller finance. It was like,
PMP.
it was a finance from
Partner.
the partner. It was
Yeah.
putting money into the deal.
Back before it was cool.
Yeah, and then I did a cash out on that property, and we bought another one for, again, $50,000.
Yeah.
And then just kept on jumping. 50,000 was like my number. And then my parents had bought a house in Fontana for about $90,000, if I'm remembering correctly. But 3 years down the road, we couldn't get a loan on it. So we were all in cash.
Mhm.
It was a zone light industrial, but there was a house in it.
Oh.
So we couldn't cash out. We were working with like US Bank, and I didn't have all the contacts by then
Mhm.
that I do now. So I couldn't get my money out of it.
Yeah.
I wish we hadn't sold it though, if I could have financed it, because it's worth now 600 grand.
Oh jeez.
650, I think. So, but nevertheless, sold that house. We bought like 4 other houses here between
In Vegas?
between 70 and like $90,000.
Nice. This
And
is
and I'd
between
been-
you and your parents.
Yeah.
Okay.
Yeah, and then we were I remember just driving around even before we started buying those houses. And some of those houses in older Henderson were going for $25,000, $35,000.
Jeez.
Not, the brand new 2000.
Yeah.
We're talking about 1980s. But still, you could take that down and sell it for more than just the material, like the wood,
Yeah.
the copper, and all the basics. You could sell it for more than that.
Yeah. No, definitely.
And so, yeah, that's when we were like, okay, it's a no-brainer. Like, go as much in as we could.
Yeah.
And that's where we went high risk.
Okay. What? But you were buying cash, right? So-
Cash and cash out.
So why was it high risk?
Because it was everything I had.
Okay.
You,
Yeah.
you went all in.
Yeah, it was all my chips.
Okay.
All
Yeah.
at that
Betting.
time, it was all I had.
All on black.
Yeah.
So a lot of the way how you started was like through partnerships, right? family.
The first one was my partnership.
Okay.
Cousin of mine.
Okay, and then your parents. Is there any advice that you could say about partnerships and? Because it's hard. A lot of people I talk to nowadays, they want to do it in their head, but
yeah, I say choose your partners pretty carefully. Don't just like, oh, I just met you today, like
let's partner up
tomorrow, because that's a little bit difficult. You don't know who they are. You don't know how they're gonna be when you lose money or when there's no money. And for the first 5 years of that partnership with my cousin, there was like no money. It was just going out. Everything we would put in, it was just money going out. Even though we were getting rent, and it was like we'd buy houses for just cash up front, you still got to do repairs. Maybe something breaks, that's still coming out of your pocket. And back then, I wasn't getting $2,000, $2,500 rent. I was getting $800 of rent.
Yeah.
So the rents have tripled now, almost.
Yeah, exactly.
Triple, quadrupled since then. But back then, like any little repair, we're like, okay, there goes the monthly rent. And I still got to cover the mortgage.
Yeah.
Yeah. So, but choose your partners carefully. I was not wise enough at the time to put like agreements and contracts in between those partnerships. But at this point in my life, if I were to get into a partnership, I would make sure there's a contract.
What would you put in those contracts? What clauses would be for sure in that contract that because of your experience now you know, like, all right, I'm gonna be careful this time, so this has to be in the agreement?
Mediation before litigation.
Okay.
Let's go through mediator before we try to go the legal route.
Okay.
Like that, because that's a lot cheaper. And I have that actually in my rental contracts, so that if someone wants to sue me, they have to go through the mediation process before they try to sue me.
Okay.
And vice versa. Because anything you involve the lawyers in it, just racks up a lot more.
Yeah, the lawyers are the ones that win
all the time.
So has that happened to you where you got sued?
Threatened? Yeah, threatened a couple of times.
But nothing.
Not official.
Okay.
Yeah, threatened. So had to write check once, and then had to cut the rental contract short on the other time.
Okay.
Yeah, because I was like, all right, this isn't worth it.
Yeah.
Let's just move on.
Okay. Is this audio good? I hear that you got cut off
a little bit. Yeah, you could get a little bit closer.
All right.
So, what other clauses have you for sure has to be in your agreement, in your partnership agreement?
Well, I haven't done a partnership agreement like I was telling you, because I haven't had any new partnerships.
Okay.
But in my rental contracts, specific clauses, I would say like early cancellation is one of them.
Okay.
So like 2-3 month early cancellation. So let's say I sign an 18-month lease on a long-term lease, and they want to buy a house, but they don't know if they're going to buy it in 6 months or 12 months. I'll say, okay, that's fine. Like, I'll be flexible with you as long as you pay this clause out. Like, you can end it, and let's say I want to sell the house, I'll pay you too.
What is the clause?
An early cancellation.
How would you word it? Because that's interesting.
It'll just
copy it from you.
Off the top of my head, I don't know the exact wording, but in essence, it's just 3 months of rent equivalent.
Oh, wow. Okay.
Yeah, 3 months of rent. So if the monthly rent is $2,000, then either party can pay $6,000 to end
the agreement early.
Yep. At any point in time.
That's interesting.
Now, I don't have it exactly at 3 months or in every contract. Sometimes I'll tweak it a little bit. Say, hey, after 6 months, you can use this clause.
Oh, okay. I got you.
Or after 12 months, you can use this clause if we sign like a 2-year lease or something like that.
Yeah.
It'll depend. Different tenants, different needs. Try to be flexible, but I also try to find a way that is beneficial
to you, right, as a business.
Yeah.
That's interesting.
That's a good one.
I've never heard that one before. First time. Right. Pretty smart.
Yeah.
You should put that on yours.
I am. 100%.
I don't have rentals.
3 months, they'll probably die if I put 3 months, because my people are not, super loaded. But a month, a month and a half, that'll be good enough. Because sometimes I'm like a little bit too flexible, I believe. Like, people are like, hey, like, I have in my contracts, like, let me know at least 30 days. And they're like, oh, I'm leaving. I'm like, when? Oh, in a week. I'm like, oh, Jesus Christ.
How long are your contracts?
My it started with 3 months and then goes month to month.
Okay.
Yeah.
And do you charge normal market rent on a 3 month?
No, I charge lower because what I do is pretty much lower than market rent. Well, So I'm talking about like renting out like the studios.
Okay.
Yeah. So it's like lower the market rent because I'm not renting out the whole house, but like let's say like a 2-bedroom,
It's like an ADU.
like an ADU, almost. Yeah.
Okay. Why do you charge less though? I don't get it.
Me neither. Why?
You should be
So
charging a premium.
I mean I'm not in the best areas. The properties they're not in the best areas.
I know, but that has nothing to do with you charging below your market.
Exactly. Good point.
Market rent is
Yeah.
where it is regardless
I don't-
of.
I don't think I charge less. I think it's just normal. For example, I have a 1-bedroom apartment and charge 1,200, but it's like
But you do
in
1
a
month.
house. It's a part of a house. It's like not the whole house. I'm not sure if I'm
It's like
explaining
it's
myself.
like 2 units. So
Uh-huh.
the
Yeah.
smallest unit, right?
Yeah.
That's what you're saying?
Yeah.
The smallest unit he charges 1,200. for
So-
one bed.
so
Is
at
that
the end of the
normal
day-
market rent for 1 unit in that area.
Yeah.
So he does not charge under market rent.
Yeah.
That's what you're saying.
So yeah, exactly.
But
So
you're doing 2-3 months. Why aren't you charging above market rent?
I should
Yeah,
because less time.
12 months is market rent. So
Okay.
if you're below 12 months, you should be charging
More.
You should have that capacity.
Okay.
So it's like
Right, unless like your neighborhood is so horrible that
Yeah. It's
yeah.
I mean it's not terrible, but
yeah.
it's not bad.
it's not.
You think it's bad, but it's not bad.
Oh, it's not. No,
Yeah.
definitely not.
I
The more you
used to-
know Vegas, the
You just seen the ones that I've seen.
yeah,
So-
no.
So wait, so
Or
Oh, that's a
Vegas.
good one though.
going back, so if it's flexible, if it's less than 12 months, you charge above market rent.
Yeah, for sure. 100%. Even 9 months, I'm above. And when I say above, I'm aiming like, I aim for 3. Sometimes I'll get a 2, sometimes I'll get a 5x.
Okay.
But I aim for 3.
Here, Vegas, or
Yeah.
anywhere.
Anywhere.
Hey, we should learn that. Put the
Wait, so how does that work?
So let's say like I have a 3-bedroom in Older Henderson here.
Yeah.
Normal market rent, let's say 1,600.
Mm-hmm.
The tenants is just left. They were paying either 46 or 4,900 a month through the insurance route,
Oh, jeez.
right?
Okay.
And I just once I got a bite of that apple, I figured, okay, I can go as high as 5x normal market rent, depending on the need and depending on the circumstances. Like you start reading
Okay. Get you.
because you're kind of playing a chess match or a soccer game with the other counterparty.
Mm-hmm.
Right, and depending on what their needs and what's available, you can kind of figure out what you can
Yeah.
charge. And so, yeah, I mean, at first when I started working with them, I think on that house we would rent it for like 2,800, even though market rent was 1,600.
Yeah.
And then I've gotten as high as 4,900 a month.
Wow.
And we're talking on some of those contracts 9 months, some of them are 2 months, 3 months.
Yeah.
Yeah.
Okay.
Yeah, and they're all generally now less than 12-month contracts.
Hey, can you set a limit on those contracts? Like, hey, no less than 3 months.
Yeah, of course we can, but it's
They have options.
they have other options, or some of those companies will say, well, we need only 30 days.
Okay.
So you can set whatever limits you want, but that doesn't matter. It's what they're looking for,
Okay.
Okay.
right? You're providing the supply, and they're providing the demand.
Right.
Okay.
Okay.
And but you're talking like going through insurance companies, right?
Insurance and corporate.
Okay.
Is
Perfect.
that most of your business or 100% of your business?
I would say that it's not most of like the churn,
Mm-hmm.
but it is most of the income.
Okay. Got you.
It's a bigger portion of my top line
Okay.
for sure.
How about your normal rentals, your 12 month?
Yeah, those
tenant?
are boring, not sexy.
But you have
I
those.
keep them if they're good tenants, good paying tenants.
Mhm.
Mhm.
And if they're not, I'm like, okay, well, I'll turn it into midterm rental. I used to do mostly just short-term rentals when you could easily get 5x
Oh, I know what
by
you're
just
talking
putting it on Airbnb.
The golden years.
Yeah, the golden years back in 2016. Just put it in
Yeah.
bed and like this, you could have rented it like for $2,000 a month or something like that.
Yeah.
Like in a little and this would have been like a big place, but not nowadays. Nowadays for $2,000, you could maybe even get like a 3,000 square foot house on Airbnb.
Yeah.
And I'm just like, well, that's no competition. There's just too much competition actually.
Yeah. No.
Right now, yeah.
Definitely.
There's not enough income for me. So, but it was a sort of like a changing that chip too. Like
Yeah.
rewriting in your brain, like, okay, market rent is this. Now, how do I get above market rent? So like meeting people, learning, reading, interacting, and then just kind of believing in yourself, say, okay, I should be able to find a way to get more than this.
Okay.
And then that's where your mind just your subconscious just kind of opens up and starts seeing other possibilities.
Options, yeah.
Right? And that you didn't see before.
No, definitely.
Do you think you were born with that, like, curiosity of
I don't know if I was born with it, but I think I was, I don't know how you say this in English, but like bred for it. Like
Okay.
my early childhood was just with my mother.
Okay.
Until the age of 7.
Mm-hmm.
And my father was here. And so she was always like pretty adamant about, you know, putting it into my conscious and my subconscious that you can do anything and everything you want.
Okay.
And I had family that would, you know, every time they would see me, they were like, hey, Jimmy, what are you going to be when you grow up? Since like the moment I could start talking.
Yeah.
And so like for me, it was kind of just natural to think in those levels just because that's the way I was brought.
Okay.
But I guess I was fortunate because when I talked to other people, most people, they didn't really have that upbringing.
Yeah, no, man. Especially in the well, at least in my family, it's my family's from Mexico. Like, especially now, like my cousins and stuff that have kids, like they don't. I haven't seen it. I don't know. Like, if you're watching this, sorry, but I haven't heard you guys talk to your kids about like what do you want to do, critical thinking stuff. Nothing, man. They just give them a phone and here, entertain yourself.
I think what you said right now just resonated with me a lot because my mom, I mean my whole family too, like they've always fed that into my mind too. Like you could do whatever you want.
Yeah.
So nothing is limited. Nothing's like, you know, you just have to want to do it and try and get to it.
Yeah.
And actually I could think of like probably 2 times that my mom has like cussed at me or said something like
Yeah.
really hurtful or bad
Yeah.
in my whole life. And I'm like 32, so
Yeah.
I think those words like really encourage you. And I guess like what you said, it just unlocks something in your brain.
Yeah, the other thing is not giving up. Persistence.
That's another one.
That's like
Yeah.
the major separator that I've noticed from people that are
Yes.
successful and not successful.
Persistence.
Millionaires and not millionaires.
Mhm.
It's persistence. It's like when you say, I was kind of feeling like I wanted to give up. When you say those kind of words,
Mhm.
if you actually act on that and you do give up, that's the difference maker between a multimillionaire and a almost millionaire.
Oh.
They quit just before you became a multimillionaire.
Yeah.
You're right there. And that's what I've noticed at least.
And you know what is funny? Because I mean, we started like a little group of like people who come to the office and we're like doing calls and everything. And I told them like, as soon as someone quits, like we're gonna take off a little bit. Like right next, like after another person quits, we're gonna take off a little bit. Once pretty much everyone's gone, like there's just gonna be a difference.
It's like clockwork, man.
Yeah.
People come like, oh, I want to join your guys' team, and then they start it. They see that it's not that easy, then they quit, and then we take
Boom.
off.
1 transaction, leave
Yeah.
again, like 2 transactions.
Man,
It's crazy.
I don't even know why they leave too early.
Yeah. And
Like, just
sometimes it's
right
just
there.
still doing the work even though you see no results.
Yeah.
And then eventually you get the avalanche. Like when I was doing the midterm stuff, this last trip I was in Peru for like 7 or 8 months. As soon as I like left, I had like 4 vacancies. And for most of my trip I had vacancies. And they kept on building up and I was like, oh man, like Jesus, these are not producing. I was like, I'm not gonna die. Like I have enough reserves, but damn, why are they not producing? Like what's going on with the economy? And even though I was there, like I could have just chilled and like drank mojitos and just been at the beach or whatever. I was calling every day, dude.
Mm-hmm.
Sending emails, calling insurance company, construction companies. I was trying to find.
Follow up.
Now I have a list of like 80 different companies that I am in contact with, and every time I have something available, I just send it to them. And sometimes, even though I don't have anything available, they'll reach out to me and say, "Hey, do you have something?"
Yeah, stays top
know?
of mind.
And so like,
Nice.
but I can tell you from those 7-8 months, like there was at least 3 to 4 months where I saw 0 results.
Yeah.
And I was like, man, am I like not doing this right? Like, what's wrong?
Yeah.
And then I remember I was like, no, like the key's not giving up.
Yeah.
I remember every other time I was successful was because I didn't give up.
Yeah.
I was like, all right, that's the key. So I'm going to stick to it. I'm going to continue.
Yeah.
And then like literally 30 days before, after I already booked everything, when I was coming back, 30 days before I came back, 100% booked.
Dang.
At like 4 or 5x market rent.
Wow. No, that's great.
Do you think it's part of because it's part of the business when you were at zero, you acted on it, right? And then I'm imagining that you created a system to when, if that happens again, now you have a system ready to not fall into that zero mark again, right? Do you think a human being needs something like that needs to happen for them to progress?
I think it's grit. I don't know if I've created a system, but I do have like a mental check where I start, let's say if I start not believing myself, self-doubt, or something like that, I'm like, hey, Jimmy, what are you doing? Don't do that. Like my subconscious will like trigger and be like, nope, don't go there.
Yeah.
Come back, believe in it, you can do it.
Yeah.
And so like I check myself, but that's my subconscious working in there.
Yeah.
It's not me consciously thinking about it. It's my subconscious that triggers in there.
Yeah.
But your subconscious, if I don't know how much you guys have dived into subconscious, but that's a lot stronger than your conscious. Your subconscious can resolve problems for you while you're sleeping.
Yeah.
Your conscious is just while you're awake and while you're 100% focused.
Tell me more about that. Have you studied that? Have you done any like programs or education on it?
Read about it, but to my personal experiences, it's been like just growing up as even as a little kid. Like, say you're doing like a mathematical problem in primary school, you can't figure it out. It's already midnight because my mom would ask for extra homework from my teachers, and so I was doing homework until midnight or 1 or 2 a.m. Right?
Yeah.
And so I'd have like, let's say 2 or 3 problems that I couldn't figure out, or the one that I couldn't figure out, and she's like, all right, let's go to sleep, think about it while you're sleeping, and then watch when you wake up, you're gonna have the answer. And legit, man, I would wake up like this, sit at the table, just write. I'm not even like thinking about it, just write, and I would have the answer.
Nice. How'd your mom know this?
I don't know.
What does she do?
She hasn't worked in like 15 years, but she used to do, like here in the States, she used to newspaper delivery.
Okay.
Yeah, when it was a thing.
How about
because everything's digital now.
Yeah.
In Peru, so the way I learned how to count was with currency, Forex. So we were going through hyperinflation in the late 80s and early 90s. And so like we would exchange money, like dollars to local currency. And since our local currency was just devaluating like by the hour, by the minute, you had to do the math like on the spot in your head.
Yeah.
You couldn't just break out your phone. You didn't have a phone.
Yeah.
And if the battery on your calculator died, you just had to do it on your head. Yeah. So I would get home sometimes and my mom would just drop a stack of bills which were worthless because it's hyperinflation.
Yeah.
Still had to count it, but I would count dollars, I would count intis or soles, which is Peruvian currencies, or other currencies that I got, and that's how I learned to count at the age of 2, 3.
Hey.
And so like, I don't know how she learned these things, but I know that that's the way she raised me.
Okay. Yeah, man, you were lucky, man.
And your mom's pretty badass. Yeah.
The bad circumstances of the time.
Yeah.
I think she was able to make good out of it.
Right.
Raising me.
It's good.
But like you said, persistence. Like you can't give up, you know. I want to say one of the biggest. I want to say sometimes you need those hard situations in your life to really test yourself. So I was a W2 worker for the longest time, and I would say like I'm not being tested. Like I've never been tested before, and now that like I'm outside and we have this business and everything, I'm like, Jesus Christ, why did I ask for this? You know,
slapped every other week.
Yeah, exactly. So, yeah, but it's cool. Like you said, some days I wake up I'm like, Jesus Christ, did I make the right choice? Like, should I give up? Should I do this? But then again, the subconscious kicks in. It's like, why? And I cuss myself out a little bit. It's like, stop being a B word, you know?
Yeah.
Like, go at it and do what you can. Start calling people. Start connecting with people. Like, why? What good is gonna come out of you complaining? Nothing. So start taking action.
Wasting time.
Yeah. Throw yourself a little pity party
Exactly.
for a little bit, but then get back out.
Mm-hmm.
Do you have a process for that?
It's more for me. It's more like a self-reflection. It's like, wait, what did I mess up on?
Yeah.
And then I try to like figure out what I've messed up on, and I'm like, okay, let's change this, this, and that, and now let's figure it out. Let's try it again. I don't think I necessarily like had those moments where like I hit like a super low. I've been fortunate enough where I haven't had, like, monetarily I've been down like negative $1 million, sure, but other than monetarily, I don't think I've really had any like low points.
Yeah.
Okay.
Yeah. So
What'd you go to school for?
economist.
Okay.
Yeah.
So all that critical thinking, problem solving, did you had that from before you went to school, or?
So I went to school for international business with a concentration in French. Completed that major as well, but as I was doing the whole business curriculum,
Yeah.
I took an econ class, and then I just fell in love with it.
Yeah.
And then I was like, oh shoot, this is awesome! Like I get to play with numbers,
Yeah.
and which I love. Like I can look at a screen of numbers, which is what I do for a living, kind of thing.
Yeah.
And just like deduct things from it that others can't deduct from. And then I started just taking more and more courses, and like, yeah, I fell in love with it. But out of that, like, I started understanding the trends of real estate, the market movement, and as I read like Rich Dad's Prophecy at the time, which was before, it was written before the 2008 crash.
Yeah.
You could kind of see the writing on the wall from a numerical, like from a data perspective. You're
Yeah.
like, okay, this is gonna happen. Pretty sure of it because of all this data. Like,
Yeah,
I
yeah,
didn't
yeah.
necessarily have access to the data, but he did because he was able to pay for that.
Yeah.
But yeah, once you saw that, you're like, oh, this is gonna be awesome for those of us that are starting out. Yeah.
Now let me ask you this question: what do you think about the economy right now, and having your knowledge?
It's kind of strange, and I think we might have like a 1970s type of economy.
I wasn't born.
No
Yeah,
clue.
and neither was I, right?
I don't know what it is.
So you're gonna have some periods of inflation that are greater than economic growth. So let's say GDP grows at 4 or 5%, you might have inflation at 8, 9, 10%.
Okay.
Which means your dollar, whatever you've got holding, is gonna just
Erode.
devalue quicker. And if you look back at the history of interest rates, so the history of prices in that time frame, they hiked up interest rates really quickly, kind of like they
same
did here.
thing. Yeah.
Right now, what we're experiencing. But real estate prices, single family real estate prices did not crash because of inflation. Especially once wage inflation kicked in.
Okay.
Once wage inflation kicked in, there was kind of like no stopping that rise. So it begs the question right now, are we going to have that type of situation? I think we're going to have that.
Wage inflation.
I think we're going to have it. I'm seeing it more and more because I'm still seeing like companies, like if they want like a skilled worker, they have to pay a premium, right? That's what I'm hearing everywhere. All my buddies that own businesses, the companies that I've worked with or consult with, that's the problem that they're having.
Yeah, man. That's the thing that we were talking when we were driving here. I was telling you, like, man, I need to hire somebody else because
Oh yeah. It's a,
the people that I have right now, I don't know why they don't. I think I pay them pretty well, but they're just not motivated. So what is it? So yeah, I agree with what you said.
Yeah, but the key for us as real estate investors is that, like, some people are saying like, well, like when it was 3% mortgage rates, if mortgage rates go to 7%, housing prices are gonna crash. It's like, well, it's a different scenario because now you have a situation where most of the homeowners have a 2, 3, 4%.
Mm-hmm.
4%. If you take it up to 4.75%, I think you're talking about like 80-something% of the
Jesus.
whole population falls
Yeah.
under that. So if you're at a 4.75, why would you sell that house?
Never.
Like, you really have to be forced to sell it, right?
Yeah. A
Otherwise you would-
situation or
yeah.
whatever.
Even upgrading it would be way more expensive. Like
Yeah.
if you want to go from a 3-bedroom to a 4-bedroom, do I want to pay an extra $2,000 a month?
Might as well just build it or something.
Build an 80.
Or just put a bunk bed for your kids,
For real though.
right?
Yeah.
And so that's where you're having this situation, and that's what happened in the 70s when you study it. When you study economy, that's exactly what happened. People were not selling their houses, even though interest rates like skyrocketed in a period of a couple of years, just like what happened 2022, 23, 24.
Okay.
Man.
Yeah, so it's not, I don't see necessarily a 2008 scenario. As someone that made a lot of money from that, I wish it would happen.
I know you would say, yeah, I wish, yeah.
But I don't necessarily see it.
Yeah.
Now my net worth, if it happened, my net worth would take a huge hit.
Yeah.
But most of my stuff is, yeah, like I have more cash now than what I invested, so
Yeah.
I'm totally fine with taking the net worth hit.
So what's your advice
Or
for real estate? Should we keep buying or should we?
you gotta keep buying, but you gotta make sure you can hold on long term. If you're buying it on a sub 2 with a balloon of 3 years,
Oh my god.
that can go against you. Because let's say you do it now, and in 2-3 years we're talking 50% mortgage rates. Where are you now?
Like
Oh.
right now, it's like 2.5.
No, I know, but where are you? Like if you have a balloon, like where?
Oh yeah, if you're in a balloon, you're in the middle of it. Like you would end up
Okay.
right there.
Unless you have the cash up front, just close that out. You're kind of screwed.
Yeah.
Right.
Right.
So the whole key in this investing thing is like get long-term debt. Don't fall for the I make quick money right now and then I'll refi in 2-3 years, because that's what happened in 2008. That whole 2005 to 2008, the whole reason why they had a fire sale is because they had the ARM loans,
Okay.
the 1, 2, 3 year ARM loans
Yeah.
that expired, and their rates went from a 1% teaser rate all the way to 6, 7, 8%.
How I don't know about. I didn't study the 2008 crash. So how long did they have on those?
On the ARMs, 1, 2, 3, 5.
5 years.
Yeah.
1, 2, 3, 5 years.
Uh-huh.
Okay.
Those were the ARMs. But
Okay.
like most of them were between the 1 and the 3, which is similar to what you have in commercial real estate. Bridge
Yeah.
loans right now.
Yeah.
So that's what I was telling you guys last time. I'm like, last time if I bought 10, I don't necessarily need to buy 10 commercial properties. I could, but I don't need. Just the one is enough to like make enough money for a few generations of my family.
Okay.
To be honest with you.
Man, it's just a way different way of investing, because a lot of people are super aggressive, I don't know. What do you say?
Yeah, I would say aggressive.
But I want to say like you have like a strategy. Like you sit down and think about it.
Yeah, a lot of people that I've noticed here in the States, they shoot the arrow and then they kind of look at where they aimed. I will aim forever an arrow, and I'm about 99.9% sure I'm going to hit it in the bullseye before I let go of that arrow. And that's where my analytical mind goes.
Yeah.
Like, I'm like literally scanning anything and everything. The one thing that hit me outside the head was COVID. I should have had it in my models, and I didn't, because even though I had heard of it and I had read of it from a guy named Jim Rickards, I don't know if you know him.
No.
Highly recommend you guys follow his stuff. Economist also. No, he's a lawyer, but he kind of talks like an economist. He's very knowledgeable. And in his models, he had like a pandemic type of event. And even though he brought it up before it happened, I totally forgot to factor that into my models. And had I known and had I studied more in depth what he brought up, I would have realized that I could have made like quick, easy money right away in 2020, March 2020. Because it was a similar pattern of what happened in the early 1900s with the Spanish flu or whatever it was called. It was a similar government response. It was a similar like initial shock for a few weeks, a few months of people just being like, "Wait, what? Huh?
What's going on?"
And then all of a sudden, business has to kind of continue. And then at the same time, initial shortage in labor, because you have some death, people, right? So you do have a little bit of shortage in labor, which is increasing demand. I'm not increasing demand, but increasing the price for that labor.
Yeah.
And you had the same pattern in the early 1900s.
Man.
Why'd you tell us this, Jake?
Again, I didn't factor into my model. I forgot to put it in there.
we sold 2 properties.
Yeah.
During the pandemic.
So
we got freaked out.
Here in Green Valley, there was a 5-bedroom converted garage, which was another 2 bedrooms.
Yeah.
With a bathroom and a kitchen, fully converted. Swimming pool, cul-de-sac, Green Valley, just a few blocks away. Wholesale at $250. We all went in with masks, gloves. There was like 8 of us that even ventured out to go see this property. Okay, and 2 had the balls to pull out to draw a card, and that's how you guys know who I'm talking about, right? Which group I'm talking about?
Which wholesaler?
Yeah. 2 people out of the 8 of us that were there had the balls to pull out the card. One won. One of them won. Highest card, and he won with like a 7 or something like that. It wasn't even like a high number. And literally, like, I think 60 days later, he sells it for like 5 figures.
Jeez.
He doubled his money.
Wow.
He doubled his money, and you know what? So, yeah, I didn't lose money in the same sense, but I lost money in the sense that, man, I should have factored that into my model because I would have known that would have happened.
Yeah.
But I did sell a house during COVID with my cousin, one of my partners.
Mhm.
We had a partnership of a few houses, and we sold one of them during 2020 because in March, because we weren't sure if everything was gonna freeze up. So we were like, you know what, let's get some liquidity. And so we freed it up because that house had some pretty difficult tenants, and like the neighbors were pretty difficult. And it just wasn't a good part of Victorville out there. So we sold it, but again, like 18 months later, that house doubled.
Yeah.
Yeah,
That's what happened to us.
That's exactly what happened to us.
Yeah, and so the most money I've seen people make is honestly on the buy and hold, dude. It's not the quickest, I get it, but you hold it for 5-10 years. That check that you thought was like nothing, all of a sudden you're like, dude, that's like half a salary, or that's 1/3 of a salary.
Yeah.
How many of those do you need? 3, 4?
Yeah.
Then you're kind of golden. You're like, all right, I'm good. Peace out.
Man, so what I see a lot that you said, I used to trade. So one of my mentors used to say, history doesn't repeat itself,
Right.
but it often rhymes. So a lot of what you're saying right now, I'm like, Jesus. So like it's pretty much like it's written. You just have to follow it and understand it.
You gotta look for it.
Yeah.
Right. Most people aren't looking for it.
What's the next rhyme?
Well, right now we're playing out the 70s.
So what's next?
The 80s. I'm just like, I don't know.
Bro, were you done playing the 70s?
I don't even know what happened in the 70s.
Well, that's why you gotta look it up, man.
Yeah.
You gotta look it up. You gotta do some research. Loan assumptions, baby. That's what
Loan
happened.
assumptions. That's what's happening right now. Well, kinda.
It's a very small scale.
Oh, yeah.
But that's what it was then.
Yeah.
That was like the main thing. 70s,
Oh my
80s.
God.
Loan assumptions.
So the same thing.
Yeah, but it was a little different. Like back then, the way I understand it, around either. The way I understand it is you can kind of just step in and assume on almost any mortgage, whereas now it's like VA, USDA, and like FHA, like a handful, not every mortgage. Whereas in back then, it seems or it sounds like from what I've read, almost any and every mortgage.
And the highly talked about subject too, right?
You have to qualify, and the mortgage goes on your credit history.
Yeah.
Whereas in the sub 2, it does not.
Yeah, it doesn't.
And the servicer or the bank can call it due whenever.
Okay.
Because technically you violated the due on sale clause.
So that's one of the biggest issues, right? I mean, we've talked about it.
Yeah.
Outside of this, but
Yeah, I mean, like for the sub 2, I mean, I think you guys mentioned there was like one company that kind of insures against the due on sale, right?
I
And
think it's gone. That thing's gone.
there isn't even one company that insures on it?
But like a year and a half ago, there was a company.
I heard there was 2 from Pace. But
Yeah,
maybe
I
there's
think that's
both gone.
I haven't heard
so
of it.
the one company I remember, I went to their website. It was really weird. So I tried to go to the website, it wasn't there, and then I don't know, somehow, some way, I found them. I think on Facebook, and then I went to the website, but I don't know. It didn't really look like it was active.
That thing probably lasted like 6 months, and then it was gone.
Yeah, I mean, if you look at it from an insurance perspective, mathematically,
It's very risky.
it's highly risky and it's bound to fail because like just one of the smaller shops that I consult with could call, let's say, all its notes due
Or-
that are in sub 2
Yeah.
and bankrupt that little insurance company.
Yeah, and there
So
wasn't
small.
there wasn't enough people to
Absorb the.
absorb the risk.
Yeah.
So how many sub 2s do you know there are? You probably know like 10.
Yeah. That's the risk I think with sub 2. But I mean, maybe Pace has more information. I heard one video of him where he was talking about like getting insurance against it. But
Yeah.
you know,
That's probably an old video.
it
right?
could.
Yeah.
Yeah, it was like a year or two ago.
Yeah.
Yeah, probably.
Like that. Yeah.
Yeah.
If there's nothing against it, if there's nothing new, then it's probably risky, I would say. But
Okay. Let's get into the question that I want to ask. What do you think about sub 2s based on the line of work that you do? Like what do they think?
oh,
What's their opinion on it?
On the mortgage servicing side, the different companies I've worked with, there's good and bad for me speaking as a mortgage servicing company, let's say. Not on behalf of any company, but just in general. The good would be like, for us as a mortgage servicer, would be like, hey, if I call all these notes due, all of a sudden I can cancel all these low mortgage rates.
Mm-hmm.
And let's say, hey, like you have to pay this off in 30 days, 60 days, whatever it is.
Yeah.
And say, oh, and by the way, here's my lending partner. And guess what? I'm making fees on that.
Yeah.
You can he'll do it within this timeline,
Oh, I get you.
right? Or you could go for, or you know what? We'll even work out something where we'll say, hey, like we'll give you an extension if you're working with this guy, but if you're working with someone else, it's a hard deadline. Let's say.
Yeah.
Potentially, I'm not saying that these are actual things. I'm just saying these are
Hypotheticals.
But then at the same time, there's these things called MSRs, mortgage servicing rights.
Yeah.
So when you are a mortgage servicer, you own, let's say, a package of loans, and you're not necessarily the investor. The investor could be another bank. But there's the MSR, mortgage servicing right component, which in essence has its own value.
Mm-hmm.
And it has its own value to the extent that you as a servicer get to collect these monthly fees, 5 basis points, 10 basis points, whatever you negotiate, let's say, with whoever the investor is. And so if the mortgage rates are now at 8%, 9%, and the average mortgage note on that package or that portfolio is 3%, the value of that MSR has gone up because no one's going to get out of those mortgages. And so me as a mortgage servicer, I'm like, oh, okay, that's kind of cool, because now why would I want to get rid of that when that's what kind of pays me?
Yeah.
That piece pays me. But there's also this other component where, like, on the lending side,
Mm-hmm.
if I force liquidation, I could make money in liquidation.
Okay.
So those are the pros and the cons.
Oh, I get you.
But in our economy, wouldn't this is my opinion, wouldn't forcing or calling that note, you will force the homeowner to refi or get another loan, right? What if they can't afford that other loan? Now you have no note.
Well, it's no longer our purview, because they're not our borrower anymore, right?
Right.
Yeah. They've by doing a sub 2, they've triggered the due on sub.
Right. But I read the notes where it says if the investor finds out, they could call it.
Yeah.
Why did they put that verbiage in there? Like when they could, instead of like they will call it and they could call it.
Well, that was that other component where it said like the MSR, like there's value to that.
Mm-hmm.
Yeah.
So
Those
like
mortgages are always gonna get paid, right?
yeah. So like, why would I, as a mortgage servicer company, why would I want to liquidate that?
I get you.
So are you, like the servicing,
There's one is a mortgage servicing company and one's the lender,
right?
the investor.
Right.
They could be the same entity or they could be two different entities.
Okay.
So the sub 2 could be beneficial or negative for either or of those situations, or either or of those entities.
Okay. Do they communicate a lot between the servicer and the bank?
Yeah.
Yeah.
Yeah, for sure, daily, multiple times a day, for sure. But I haven't necessarily seen any one action where someone said like,
Taking
hey,
like a big.
let's run title on these guys and like let's figure out who's no longer on title and let's start forcing some liquidation.
As a data guy that you I'm pretty sure you're leaving spreadsheets, right?
Uh-huh.
How hard would it be to find out who's on title and not on the loan?
from a coding, pulling the data perspective, minutes.
I know.
From the actual perspective of like getting the data, like getting that from title,
Yeah.
it depends on what jurisdiction they're going to, right? If that jurisdiction has digital information, then it's instantaneous. If that jurisdiction is still on physical paper, then
Take a little bit
few
longer.
weeks. Right? But yeah.
We know AI, right? Because a lot of people are excited about AI nowadays.
Well, actually, I use it quite a bit.
I know.
I use it quite a bit at work for coding. So I'll put something in ChatGPT or Gemini and say, I'm struggling with this with these lines of codes, like help me fix it, and it'll spit out a few options, and they're like, actually it's this particular line that's your error. Just change it to this. And
Oh,
like,
man.
oh, okay. And then I know, like, you're from experience, you already know that you want to add another little part, so you just add your piece to it, and you're like, all right.
Yeah.
Like, so it's
That's
like,
cool.
yeah, from like a coding perspective, it's made me like a lot better coder. To be honest.
That's cool.
Yeah.
Wait, so in your opinion, based on what you've seen, are sub 2s in danger to get called, like massive calls, or no?
There is a danger, but at the same time, the big guys, the investors and the mortgage servicing companies have to kind of decide on how hurt would they get if they make this call.
Okay.
Because if they create a 2008 scenario, I don't even know how big the sub 2 population is nationwide. I don't know the complete portfolio, but if it's like 5, 8, 10%, that's a pretty big size.
Okay.
Because if in overnight you call that due,
Mm-hmm.
you have default rates skyrocketing overnight pretty much.
Mm.
And then that negatively impacts the valuation of those debts, mortgages, the valuation of those houses. You're in essence forcing foreclosures, bankruptcies, and so forth.
Right.
So yeah, that might be something, but you could have a small shop, little credit union down the street where you do all your business. They're like, hey, like I have these 100 loans. I'm not gonna impact the Vegas economy. I'll call them all due. Why not?
Yeah.
Right? And then I'll tell them, hey, you gotta pay it within 30 days. And if you use me as a lender with the current mortgage rates, I'll give you an extension however long it takes to do it. But if you go somewhere else, you gotta do it in 30 days.
Jeez.
So what I'm hearing is, if you're doing sub 2, stick with the bigger ones, the bigger banks, bigger investors.
I don't know if that
No comment.
yeah, I don't know if that would be the situation, but it could be, it could not be. I don't know yet. To be honest with you, I'd have to listen in on a couple more conversations about it.
Nice.
Yeah.
That's some really good information, honestly. Hearing it from the other side, right? Because you hear from third parties or whatever. So it's great that it's coming from you.
What do you call it? When it's inside information.
Insider information. Yeah.
That makes it
It's
illegal.
from the source, right? It's from the source.
The source itself.
Let's just call it industry information.
Yeah.
Industry.
Yeah.
Those are the rumors that are going.
Yeah.
So you haven't done sub 2 transaction yet, correct?
No, I'm looking into a loan assumption.
Okay.
Potentially doing a loan assumption for myself, where I would have actually occupy it and be like
Okay.
a homeowner there, just because of the benefits, and I can qualify with the W-2 and all that. So, and then, yeah, I mean, like some of the deals I'm seeing are like 2.5, 2.8, and the sellers are sometimes willing to carry a note on top of it, a 10-year balloon or a 15-year balloon.
You're right.
So I'm like, okay, well, I mean, in 10, 15 years, like I'm comfortable with that long of a length. If they said they want a 1 or 2 year, or even a 3-year balloon, I would say no way. Yeah, personally, no. Because I knew a few guys that were doing some midterm rental stuff, and they were doing some short-term rental stuff, and they, in 2002, as rates were going up, they were doing we'll refinance in 1-2 years when rates go down, and I haven't seen them in a while. I don't know where they are, but I haven't seen them in a while.
Jeez.
Yeah.
On the loan assumptions, you have to live in the property. Yes.
Yeah.
Okay.
Yeah. For all the guidelines I've read from the investors, when I say investors, like USDA, FHA, and those guys.
Okay.
Yeah, those are the investors in the industry.
Okay.
Yeah. generally you have to live in it for a time period.
I think it was like 2 years, a year, 2 years,
A year,
something
2
like
years,
that.
yeah, something like that. Yeah.
Okay.
You have to live in it.
Yeah. So
It's not bad. A question for you: if someone wanted to start on the MTR space, so they could like 3x or 4x their rent, what would be the tips that you could give someone like just starting out?
Man, I don't. If like you have 1 or 2 houses, I don't even.
It wouldn't
know that it's
work, right?
I don't know that it's worth your time, right? Reason why I even put in all this effort while I was telling you guys in Peru,
Yeah.
while I was there, is because I had 10,
Okay,
and so I was like, okay, well, if I build a relationship, it's times
that
10,
makes sense.
right? And then on top of that, like whatever extra I have, I can pass it on to friends or colleagues and stuff like that. But in essence, I figured I could and should be able to fulfill most of those requests. And there's a couple clients that I've had that they need like 200 units, 300 units, more than I have, right? So a couple of those, I haven't been able to fulfill, but practically everybody else, corporate construction companies, 2 or 3 units is what they're looking for. Some of these insurance companies, it's not like they have a list of what they're looking for right now. It's like they can have something today. They may need something today. They may need something totally different tomorrow.
Okay.
And so that's the problem. So spending all that time, making all those calls, sending all those emails for 1, 2, I don't know if it's worth the time.
Yeah.
But if you have 5, 10, I think
Okay.
it's time well invested for sure.
I get you.
Building that business. It's sort of a business in itself.
Yeah.
yeah.
To be honest with you.
Yeah. When I looked into it, I actually told him that because we have one house that's very close to a hospital, and I looked into MTRs because I thought it was going to be a lot like Airbnb, right? We've done Airbnb, put it on the platform, it rents by itself. I don't have to do anything.
Exactly.
But now I quickly figured out that I was like, this is a relationship business.
The business itself.
Like,
Yeah.
if we're not going to scale it up as a business, I'm like, we shouldn't touch this.
Yeah, exactly. Because I was doing like ALE platform was like the easiest one. You can just go on there, LA properties, LA whatever it's called, and just list your property there. But you get a call once in a blue moon,
Yeah.
if and when they need it, and generally if they don't know you, you're the last guy that they call. So they're kind of hoping that you have it available. But if they call you 13 months after you put it in there, chances are you probably don't have it available anymore.
Yeah.
And that's
Yeah.
generally what happens, right? And so you have to be top of mind for these guys, and you have to have more than 1 or 2 for sure.
Yeah.
If you're doing with just onesie twosies, you're not top of mind. You got to be in the 5-10 range
Okay.
for you to even be considered by them, I think. At least that's what I've noticed.
Okay.
So in your business, man, what do you need help with? Like what can we help you with?
For sure, if good loan assumption deal would be awesome right now. I need a bigger house. So that would be awesome here in Henderson, ideally for me. Midterm rentals, why not? More contacts if you guys know any construction companies or any other corporations that are looking to house out here in Henderson primarily, then just forward them over to me. You guys can link me up on the LinkedIn, so if people want to get in contact with me, that's like awesome. The one social media. I know you guys are giving me a hard time about it. That's the one social media you guys can find me on. LinkedIn.
What's LinkedIn?
What is? I'm just kidding. We'll put up your LinkedIn there.
Yeah, you guys can find me on there. And then wholesale deals. I mean, like if I'm not doing the 80%, like I'm more along the lines of 50, 55%.
Wholesale?
I can close in 10 days, cash, hard money, whatever. Like my money, as long as it's 50-55 cents on the dollar.
Anywhere? Or just Vegas or California as well? Or
Southern California would be like the high desert, like Victorville, Barstow, Apple Valley, Hesperia.
Okay.
Out here, it's Henderson, Summerlin. Most of Vegas, just not North Vegas. Definitely not touching. I have some rentals there, but they're a headache.
Done.
Yeah, it's a headache.
Done.
I don't necessarily like going that way.
Okay.
And it's a different crowd. I have older houses in Henderson where the tenants make 3 times what the tenants in the new house in North Vegas make.
Wow.
Which is like the weirdest thing, right? And it's an older house, like a 1970s, 1960s house in Henderson.
Yeah.
Yeah, so I'll have people that make $150,000, or sometimes I'll even have tenants that are millionaires, and they're retired, and they're moving from California or from wherever, and they just want to, live for the next few years unbothered. Like, I'll pay a full year's upfront.
Okay.
Jeez.
And like, change your process. You facilitate the, whatever. I had one tenant actually who, Gary Henderson, multi-millionaire, passed away. I didn't even know he passed away until his sister reached out to me and told me that he had passed away. But this tenant was paying even after he passed because he was set up on ACH.
Oh.
Which is another reason why I didn't know he passed. Because I was still getting my checks,
Yeah.
my direct deposits. Such a good tenant that he was even paying after he passed, dude.
That's the ones you want.
Those are the best.
Yeah. Whereas in North Vegas,
Yeah.
I can tell you of one house, it's been burnt.
Jesus.
People, when they live there, when they they just up and leave. Like, they don't even give me the
The
courtesy of
notice.
1 week.
Hey, I'm leaving. No. Oh.
They're gone, and like, you can't contact them. You can't. Nothing. Like, that's been my experience with North Vegas. Like, I don't know if everybody else has that experience, but that's been my experience with North Vegas. So that's been my problem. Those are the reasons why I don't like dealing up there.
Yeah, we're about to find out. Cause
from Saddlebrook?
Yeah.
You want a house?
And no,
not North Las Vegas. Yeah, that's where it gets a little different. It's a different crowd for sure. So like, even like in Henderson, another one, he was working for Vertec, the trash company.
Yeah.
I was making like 150 driving the trucks.
Jesus.
Right, and my guy in North Vegas, newly built because it was burnt. Newly built. Making like 39.
Yeah, man, different demographic, man.
All right, different demographics for sure, and so that it's one thing to deal with someone that makes a 6-figure salary, and it's a whole another skill set to deal with someone that's borderline poverty.
Yeah.
Yeah, and so I've learned that I don't necessarily, that's not my skill set. The poverty crowd is not my skill set, so I'm sticking more towards the Henderson crowd, Summerlin crowd.
Patience for that.
Yeah, I don't have the patience for it.
Okay.
Yeah.
Cool.
Man, I have a lot of questions about
but
MTR.
we're
We're an hour already. Okay, so
we're gonna have to do episode 2.
Yeah. So start with that, and then we'll end it. So just say about the second.
Well, with that, I already said it. So we're probably gonna have to do a second episode, Jimmy, because I have like 4 more questions for you, but we're already at an hour, and I'm pretty sure he has more questions.
I'll give you guys one more question.
So,
One more question.
Would you ever do a subject to?
Would I ever do a subject to?
Like, if I gave you equity and cash flow, which is probably gonna be never, because it's hard to find those deals.
I was gonna say, if you give me equity and cash flow, I'd probably just resell it.
Oh, okay.
Right?
Yeah, you can.
I mean, I'd offload the risk and take the money.
How about just cash flow? Let's change the terms a little bit. Just cash flow, equity is like break even.
Well, the risk component, I don't know that I would go for that risk.
Okay.
Okay.
If it's just cash flow, I don't know that I would go for that risk, because it's not long term. It's not necessarily long term debt.
It would be a good midterm rental. Like, take it in Summerlin, South Summerlin, 2.75 interest rate. $2,300 a month.
I would.
This keeps getting better and better.
In the best case scenario, I'm probably gonna make $4,900 with 3 bedroom, 2 bath. I'm guessing.
Mm-hmm.
Yeah, I'm gonna make $4,900 on it, so I'm only gonna make about 2x.
Okay.
A little bit less than that, which is after utilities and everything else.
Yeah.
So just to make another like 80%, I don't know, that's enough.
No.
Upside. Just 80%.
Okay.
Because when I do the math, it's just about 80% above market rent.
Yeah. So you need 100. You need 2x.
Remember, I'm making 4 to 5.
Yeah. Where are you investing right now?
Where am I? If I'm
Yeah,
buying?
Where you buying?
Where are you buying?
Are you buying right now?
So in Vegas is gonna be really hard to get a 50% ARV.
Yeah.
Right.
Yeah. So that's what I was telling you. Like, the last deal I had that was close to that was in Barstow.
Okay.
Yeah. I was negotiating even a little bit lower, and
Mhm.
I couldn't. They wouldn't budge. So I was like, all right, well, I'm not in a rush. I'm okay.
Oh dang.
Well,
that's
there's
how you're supposed to do it.
there's
Well, I
not-
would have been like, nah, bro, let's just do it.
Just do it, bro.
Yeah, no. See, yeah. Well, I mean,
Yeah.
it depends. Like what your needs are
Yeah.
when you're sitting in a comfort zone and you're sitting on the stack and you don't necessarily need your money churning. Then you don't have that need anymore.
Yeah.
But when you're like, okay, I need to do this deal in order to
Get
keep
to the
on
next
getting-
level. Yeah.
keep on growing this stack, that's a different need,
Yeah.
right?
Yeah.
And so yeah, in the beginning, like I said, every penny I had,
What's going
was
in?
going in.
Yeah.
for sure.
Yeah.
But once you build up your reserves, once you build up your stack, it's not a need anymore. And so
Yeah.
you get to be a little bit more selective. And why take a wild swing at everything? When you
Yeah.
can just be more precise.
We're not at that stage.
Yeah,
Just so
we're
you know.
going crazy right now. Question: if you were to invest in a city or state other than Vegas or California to find those returns, where would you go?
Indianapolis.
Oh, Indianapolis. Okay.
At Ohio.
I don't know much about Ohio. I've spent like a couple months already in Indianapolis.
Okay.
There's a lot of stuff going on. It's surprisingly how do you say this? Industrialized, I guess you could
Okay.
say. When I went the first time, I was just expecting cows and horses everywhere, to be honest with you. So when I went to the city, I was like, whoa, this is like a regular little downtown. But, it was cool.
Yeah.
And then I went to some of those suburbs like Carmel. And,
Yeah.
what's another one? They're really nice. They might even put Scottsdale and like Henderson to shame.
Oh,
really?
Wow.
Yeah, like they're
Oh.
big lots, big houses. Like you're talking like the average middle income house is like 5,000 square foot on like a
Jesus.
30,000 square foot lot kind of thing. And so I was impressed. I spent some time with a buddy out there that had his house and stuff like that. And he told me, like, he's like, when I bought this house, like all around me was just cows and llamas and stuff. And all of a sudden he's like, in the last 5-10 years, he's like, there's houses everywhere and each one sells for at least $500,000. And this is again like before COVID. This is before COVID. So
Wow.
now I'm sure it's worth
Even
more.
more.
Yeah. Yeah. And he's sitting on a couple acres. So
Wow.
yeah. So
He's
like,
in a good position.
yeah, the cows are getting moved out,
Cuz we out of the town.
Yeah.
But yeah, Jimmy, man, thank you so much for spending time with us today. All the info that you have given us has been great, especially coming from inside the industry, you know, like from a person that actually knows what's going on from the inside. And yeah.
And a different mindset because
Yeah.
you're at a position where you're not in a rush, like you said. Like you're not in a rush, and most of the people that we interview were at the
It's like-
early stages, and they're like just like you said, taking a swing at anything. So yeah, but we need to adopt that
A
philosophy
little bit at
more.
least. Yeah.
Yeah. So thanks for that, man.
Of course, man.
So we'll do a second episode soon.
All right.
So because I have probably like 3 more questions that I want to
Yeah.
ask. So
Awesome, guys.
cool. All
See you guys in the
thanks
next
so
one.
much. Thanks,
See you
Jimmy.
guys.